Now, over the last 50 years, there have been about five massive bull markets in mining stocks, where the junior mining stocks, which are highly volatile, most volatile class of securities on the planet, I'd say, have gone 10 to 1 as a group, with some stocks going 100 to 1, even 1,000 to 1 over the course of a couple of years. Now, if gold is not a good speculation at this point for capital gains, still a good savings vehicle, gold stocks are, I think, a superb speculation because they have not really kept up with gold and what it should be. So I guess the answer to the question is happy about gold, neutral about gold, price-wise, although I can build an argument why it'll go at 10 to 1 from here. But the gold stocks, I think, are the best speculation.
Welcome back to Metals and Miners. I'm your host, Gary Bohm, and today we're diving deep into the dynamic world of precious metals mining and market speculation. I'm thrilled to introduce Doug Casey, the founder and chairman of Casey Research. With over 5 decades as a contrarian speculator and one of the most successful investors in metals and mining over the last 50 years, Doug's bold insights and fearless approach to markets have made him a legend in the resource sector. Doug, it's an honor to have you back on Metals and Miners. Welcome to the show.
Well, thanks, Gary. It's a pleasure to be here. For me, here is usually in either Buenos Aires, Argentina, or Punta del Este, Uruguay. But at the moment, I'm on the shores of the Chesapeake Bay in Virginia.
Oh, nice.
Where I usually am during the northern summer.
Well, welcome back to the States. All right. So, Doug, you've got decades of precious metals and mining experience, and you've been through multiple cycles. You're one of the most successful mining investors of the last 50 years. While nobody knows the length or the scope, the precious metals are clearly in a new bull market today. What do you hope that those tuning into our conversation today will walk away with after listening to this discussion?
Well, this is an interesting time, as the Chinese might say, in a certain context. I first got into metals and mining about 1971 when after I'd read Henry Hazlitt's book, Economics in One Lesson, which overturned that simple, slim volume, all the nonsense that I'd learned in economics in college. Then, after reading Harry Brown's book, How to Profit from the Coming Devaluation, which was great then and is still great today, I decided to get into buying gold coins and gold stocks because I'd wanted to be a geologist earlier. And one thing led to another. So I've been doing this for a long time, over 50 years now. Buying gold basically is a savings element. I bought gold starting when it was $40 an ounce and have really never sold an ounce. So I've accumulated a surprising amount of the stuff, and it's been a very good savings vehicle. But here's the point I'm trying to make. It's that gold is money itself, and it's therefore an excellent savings vehicle. But now, with it around $3,700 an ounce, where it is roughly now, it's no longer a super bargain. In other words, relative to other things, price of housing, price of clothes, price of a meal in a restaurant, gold is no longer the bargain it used to be. It's about, I think, more or less where it should be. So my attitude towards gold itself has changed for that reason. point one. Point two, though, is that the companies that mine it, now, over the last 50 years, there have been about 5 massive bull markets in mining stocks, uh, where the junior mining stocks, which are highly volatile, most volatile class of securities on the planet, I'd say, have gone 10 to 1 as a group, with some stocks going 100 to 1, even 1,000 to 1 over the course of a couple of years. Uh, Now, if gold is not a good speculation at this point for capital gains, still a good savings vehicle, gold stocks are, I think, a superb speculation because they have not really kept up with gold and what it should be. So I guess the answer to the question is uh, happy about gold, neutral about gold, price-wise, although I can build an argument why it'll go at 10 to 1 from here. Uh, but the gold stocks, I think, are the best speculation, and they're not investments. I've got to underline that. They're not investments. Uh, well, they can be, but they generally aren't. They're speculations, which is a different thing than an investment.
Well, this is a great, yeah, I appreciate that. That's a great launch pad for our discussion here. So the debt crisis is keeping everyone on edge. It's driving interest into hard assets. The US now has a debt to GDP ratio of over 120%, and the annual deficit is running at more than 2 trillion, and it's growing every year. These are crisis level numbers, and there is simply no way to stop the debt from expanding without triggering some kind of deflationary collapse that would be obviously politically unacceptable. The government is trapped in this debt spiral. The only way out is through currency debasement and inflation. This reality is becoming increasingly apparent to investors, in my opinion, and it's driving a flight to hard assets. Now, it's not a complete flight, but it's starting. And hard assets, they can't be printed away, they can't be degraded by government policy, et cetera. Gold and silver, they're the ultimate hard assets. I'm not, I'm preaching to the choir here. And the miners that produce them, they're leveraged plays on that theme. Do you believe that the debt crisis continues to worsen and we could expect to see increasing demand for precious metals and mining stocks as investors seek to protect their wealth from this inevitable currency debasement?
I don't think there's any way out of it at this point, quite frankly. And interestingly, the retail public uh, in the US certainly, but all around the world, is still not buying gold and silver. And the way you can tell that is that the premium on gold coins, whether we're talking about old US gold coins, $20 double eagles, or anything, the premiums are at all-time lows. You can buy them for very close to bullion value. Now, what does that mean? It means there's not a lot of demand from the public. That's very interesting. So why is gold higher? It's higher because governments around the world are building their gold, their gold uh,
Reserves.
reserves. Why? Because in the past, they've always held dollars, but they don't trust the dollar. They can tell that the dollar is a hot potato. So even at these levels, all the central banks of the world are loading up on gold, but the public's not involved in it yet. And because the public's not involved in gold itself, they're not involved in the companies that mine it either. Now, in the mining industry, among producing miners, the all-in sustaining costs of mining an ounce of gold is industry-wide. And it's about $1,400. What does that mean? It's not the cash cost of mining an additional ounce, which is just the cost at the mine face. That's it. This is including uh, administration and overhead and the legal fees and the cost of closing up the mine years in the future. All this stuff is counted in all-in sustaining costs. It's about $1,300, $1,400 an ounce, depending on the mine. But gold itself is like $3,700. So producing miners are coining they're doing really well. Does anybody care? No, nobody cares because the big fund man, it's such a teeny weeny little industry. The big fund managers can't buy these stocks. Uh, I, listen, I'm on a Zoom group with 30 major fund managers every week. It's a friendly Zoom group, but these guys move big money. They can't. I tell them about these stocks, and they're very sympathetic, but they can't buy it. Because it's too small. They can't. They literally can't buy these small stocks. And not only that, but not the group that I'm a member of, but a lot of these fund managers have been indoctrinated against gold. Uh, Therefore, they can't. Or if that's not the case, they've been indoctrinated with all kinds of green notions where mining is awful, it rapes the earth, it's unecological, blah, 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 which is all nonsense. Uh, so if they can't buy it, and the ESG people, they want more women and blacks and gays and whatever on the boards. That's a conflict with the mining business too, because that's not the culture of the mining business, quite frankly. So for all these reasons, nobody owns gold stocks today. And I think we're looking, and they've been moving up despite this. I mean, it's been really good lately, but I think it's going to get much, much better. And I think all these stocks are going to move another 5 times or 10 times in the next couple of 3 years. So it's going to be spectacular. That's my view.
Okay, so that's an amazing view. All right, so Doug, the U.S. dollar chart, the Dixie, it's sitting at an important resistance area that's held since 2008, that, the global financial crisis. If it breaks to the downside, which it might even be doing today, it has potentially a long way to fall. President Trump has repeatedly said that he wants a weaker U.S. dollar. Since gold and silver are priced in dollars, a declining dollar automatically makes the metals more attractive to international investors, and it creates upward pressure on prices. This currency effect, combined with the fundamental drivers of supply and demand, that creates a powerful tailwind for the precious metals, the entire sector, and that could last for years. What are your thoughts on that?
Well, it's true. Trump, look, there's a lot of things I like about Trump, okay? Including his perverse sense of humor. I think he's a funny guy. But there's a lot of things I do like about Trump. His anti-wokeism, for instance. It's wonderful. But when it comes to economics, I've got to say he's a total failure, and it's going to be an economic disaster. The things that he's doing, wanting a weaker dollar, yeah, that works. Uh, it worked for Zimbabwe, for instance. It worked for Germany in 1923. It's ridiculous. What you want is a strong dollar because people, the average guy, if he wants to get wealthy, he has to produce more than he consumes and save the difference. But what's the average guy save in? He saves in dollars. And if you destroy the dollar, you're destroying his upward path. He can't save the dollars. Now what's he going to do? So no, it's there's in every way possible. Wanting a weak dollar is idiocy. It's destructive. It's disastrous.
Are you expecting the weak dollar to actually be the reality, though?
Yeah, of course. There's no way out for these people because where does the government, how does it finance itself with the immense spending, which is going up incidentally? I mean, Trump is not cutting spending, he's increasing spending. So where's the government get the dollars? Well, they can tax it from the people, but that's probably not going to work anymore for a lot of reasons. They can borrow it, but nobody wants to own dollars, the usual buyers of bonds. So where else can they get it? Well, what they do is they sell government debt to the Federal Reserve. The Federal Reserve buys government bonds and pays the government with Federal Reserve dollars, which are deposited in accounts for the US government in commercial banks like Citibank and Wells Fargo and so forth. And that increases the money supply. And that is what causes inflation. Okay. Simple explanation, but accurate. There's no way out. They're going to have to be selling lots and lots more debt to the Fed, which will print up dollars, kind of literally, so that the US government can pay its debts. So they painted themselves into a corner, and eventually it's going to result in much, much higher interest rates. I know Trump thinks he wants 1 or 2 or 3% interest rates, which is also insane because low interest rates, especially in the high inflation environment we're going to have, discourages people from saving and destroys people that do save. So it's all really stupid and perverse.
But that's what we're going to get.
That's what we're going to get. And it means that the best thing you can do is get into gold and now get into gold mining stocks. And it's not just gold, it's also silver. And you can, different metals that are mined, yeah, different arguments. Uranium, different argument for buying it. I'm very bullish on uranium, but copper, yeah, we can talk about copper too, but I'm not so sure if I'm quite so bullish on copper. Anyway,
Okay.
it's
Yeah, no, I appreciate that. All right. So in 2000 and 2008, central banks were not buying gold at the historic levels like they are today. In 2000 and 2008, debt to GDP levels, they were at much more respectable levels. I think 2000 was about 33% to GDP. 2008 was about 65% to GDP. Today, it's dangerously high, 120 plus percent. In 2008, oil prices were high while today oil prices are low. In 2008, the precious metals and the miners, they had been in a bull run for over 6 years. Today, it's been 18 months or so for gold and much less for silver and the miners. In 2000 and 2008, the BRICS Plus consortium did not exist. They were not trying to build an alternative payment system. They were not creating pathways to net settle their trade in gold to get away from the dollar for the whole host of reasons that they are, versus today. But that's exactly what exists and what they're doing today. Today's precious metals and miners bull market is vastly different. That's what I'm trying to get at. It's vastly different than that of 2000, 2008, or even the smaller bull markets of 2016 and 2020. For these reasons and more, do you expect this bull market to behave differently than those previous ones did?
yeah. Look, we've had 5 major bull markets since gold was freed up or devalued the last time, I should say, in 1971 by Nixon. And in that time, the junior stocks as a group have gone 10 to 1. It's going to happen again. We're on the edge of that happening. And I think it's going to be explosive, more explosive than it's been in the past. Um, and, where can somebody that's got some money, where can he go with it today? What makes sense? Uh, I don't want to be in the stock market. The stock market is at all-time highs by absolutely every parameter. It's higher than it was in 1929 in real terms. It's higher than it was in 1968, higher than it was in 2000. So I don't want to be in the general stock market, which is mostly just some high-tech computer stocks. And an old adage in the market is high-tech, big wreck. So very dangerous. I don't want to be in the bond market because bonds are a triple threat to your income. You got the currency risk, and we know what's going to happen to the dollar. You got the interest rate risk, and interest rates can only go higher. Uh, and you got the default risk, certainly for corporate bonds, but believe it or not, even for the US government. So I don't want to be in bonds at all. Real estate floats on a sea of debt. So you can't borrow, you can't buy, or you can't sell. No, not too interested in real estate. There are some exceptions that we could talk about. So we go back to what's cheap and what's necessary, and that's mining and these metals, and in particular, gold. I don't know if I answered the question
You
directly.
did. Yeah, you did. All right. So, what makes the opportunity in precious metals mining stocks so compelling is the timing. The institutional money, some of it's beginning to arrive, but the majority is not here at all. It's too small right now, and it's got to re-rate a lot higher for those institutional dollars to really get in. The retail wave, as you mentioned, has not at all started. The sentiment shift, it's still in its infancy. People still are not so, sold on the precious metals, let alone the mining stocks. The debt crisis is accelerating. The dollar is weakening. The Fed's about to unleash another round of monetary stimulus. All of those factors, they're so bullish for hard assets and particularly for the monetary metals that have served as stores of value for thousands of years. So why then do investors keep worrying if there will soon be a crash in the mining stocks? And what is your contention as to where things are in the mining bull market?
Well, mining stocks are, as I said before, the most volatile class of securities traded today. So that scares a lot of people away, justifiably, number one. Number two, it's that there are about 2,000 so-called mining stocks, most of them gold stocks in the world. Most of them don't have any gold and will never get any gold. And mining is a crappy business. It's a 19th century choo-choo train kind of business. Doesn't attract young people. Nobody wants to play in the dirt with big yellow machines anymore. Even finding a deposit is like an insane Easter egg hunt where you're running around through thousands of square miles of nothing looking for an Easter egg, a gold deposit. And even if you find a gold deposit, only a small proportion of them ever get put into production. And if you find a gold deposit, that's where your trouble really starts. Now you got to raise big money. You got to get permits, which generally, even if you find the mother lode, if you find the new Golconda, it's going to take you 10 years to jump through all the permitting and regulatory hoops. And then when you get into production, uh, every native group is going to try to shake you down. Every NGO is going to try to make your life miserable. Every government's going to use you as a milk cow because they know you can't move the mine. It's a horrible business. This is not like in the days of Deadwood where, you find the mine and you're a zillionaire overnight. It's totally changed the business. It's a crappy business. Another reason why most people don't want to get involved in these stocks. But uh, if you want to be a true contrarian, you buy when things you can see the fundamentals from are good, at least in the important ways. And most people don't want to have anything to do. That's why the stocks are cheap, because most people don't want to own them for the reasons I've just mentioned. So that's why I'm buying them. And it's actually been pretty good. Uh,
It's been very good.
yeah,
Yeah.
but it's
So
gonna
you're
but,
expecting
but
you're
it's gonna get much, much better. People don't remember past gold bull markets where these things, the whole market for these little stocks. I'm not talking so much about the big ones like Newmont and Barrick. They move plenty too, but the little ones move 10 or 15% a day, and
yeah.
they're on their way to going up 5 or 10 to 1 or more. And actually, I personally owned a couple of stocks that went up more than 100 times just in the course of the bull market, more than that.
That's amazing.
So,
All right. So the Fed is getting ready to embark on this rate cutting campaign. Everything's at all-time highs everywhere you look, but the economy is showing signs of weakness. The markets are showing sign of weakness. But there's also a midterm election coming up next November. There is a Fed board that is turning over to be more favorable to Trump's easy money, lower interest rate desire. And come May, he gets the opportunity to turn over the Fed chair. So, there's a lot of levers in addition to the rate cutting that the administration and the Fed can pull in order to stave off a market correction. And so, therefore, like we saw in the late 90s, when Greenspan started lowering the rates, the market really took off. It was already in a bull market, in a bubble bull market through 98. But once he started lowering rates from 98 through March of 2000, it went into hyperdrive. And that can very easily happen here this time. In fact, the majority of the instances where the Fed has embarked on a rate cutting cycle in a late cycle period like this, the S&P and with the S&P at record highs, the S&P actually was up a year later by like on average 13%. So it's very likely that what we're going to see here is the general market, the S&P is going to be up a year from now because of this. Now it could be in a bubble, but it's going to be up from now, very likely. Do you see that stimulus, that liquidity pump as being bullish for the miners?
Oh yeah, it's going to be very bullish for the miners. And as you pointed out, it could prop up the regular market and blow up the bubble even bigger. I mean, there's no telling how tall a tree is going to grow. So I'm not saying that the stock market is going to crash tomorrow morning at all. It could go much higher. And the more money they print up, where's that money going to go? Well, a lot of it is going to go into stocks. It's one place to hide. I mean, it's real wealth, quite frankly. So, yeah, absolutely. I just think the gold stocks and gold are going to do much better than because they're not in a bubble, which gold stocks are, which regular stocks are today. Yeah, I don't want to bet on the bubble getting a lot bigger. That's dangerous. I'd rather buy things that have a sound foundation and might become a bubble in the future. I expect these gold stocks will also come into a bubble in the future, but I don't think they suffer the danger of a catastrophic collapse, which the regular stock market might. And it's really dangerous that Trump wants to de facto take over the Federal Reserve Board and fill it full of money printers and inflationists and cheap money guys. That's going to cause a panic out of the dollar by knowledgeable people. They're going to go someplace other than the dollar because they can see that, look, with the amount of debt that we have in the world today, federal, corporate, consumer, uh, this is like third world levels at this point. It's very unstable. So that even though Trump wants to pump the stock market up higher and bonds higher by lowering interest rates and real estate higher, it's we're on the edge of uh, actually having a catastrophic deflationary collapse, which is actually a real possibility, even though the long run is going to be destruction of the dollar by printing lots more of it. So it's not a good situation. I'm surprised that people aren't more scared. The average guy's not, though. He's worried about
Probably,
he's worried about
probably.
how to pay his bills or maybe whether he's going to lose his job, but he's not. I don't think the average guy's worried on a macro level today. But it's really
Well, the
dangerous.
wealth effect has a very funny way of impacting people. And with the market at the highs that they're at, they open up their 401k statement and it's at least where it was months ago or higher. And that makes them feel, all giddy. But, to your point about, if the market were to suffer a large drop, but you don't think the mining stocks would, in 2000, when the general market started declining, the mining stocks actually started an ascent period there. They did not go down. And as money started to strongly rotate out of the NASDAQ, that is when the mining stocks really started taking off. And so it definitely can happen once again, since even though they've come up quite a bit, they've started at such a low basement level. But so the current setup in the precious metals, it in some people's minds, it points to a significant possibility of a near-term setback. Things have gotten overextended, even as the overall trajectory continues to favor higher levels. The question I have is, are we now safely in a buy the dip part of the precious metals and mining trend for the foreseeable future?
Well, I can just tell you what I'm doing. And I'm buying mining stocks that seem to have the fundamentals. I've spelled out what I call the 9 Ps. It's a mnemonic to make sure that I don't forget anything when I'm looking at a stock. Uh, 9 things that all begin with the P. Nine is so many that I can't remember them all, quite frankly, even though it's a mnemonic. But the first one is people. You've got to know who are the people in back of this stock. Uh, and you've got to recall that out of the 2,000 or so mining stocks out there, most of the people are just paper hangers, stock promoters. They don't know anything about the business. So it's good if you're going to get involved in these mining stocks that you actually go to conferences and meet the people that are running the company and see whether they have a track record of success or going from one disaster to another. Second thing is the property, okay? And this is hard. Helps to have a little bit of knowledge about geology, a little bit of knowledge about mining engineering, so that you can't be snowed, which is why you rely on the people again. Uh, Number three is financing. That's financing spelled with a PH. Can they raise the money at advantageous enough terms? Number four, and I'm not looking at it, I'm pulling this out of my memory randomly, is promotion. Has this stock been over promoted where everybody knows about it already, or under promoted, which is what you want, where nobody knows about it? But then again, maybe they'll never promote it. Then you don't want to put your light under a basket. So it's a question of judgment there. Then politics, that's another P. I mean, there are some places in the world that it's just dangerous to build a mine for all the reasons that are obvious, and other places that are good. Now, right now, the United States, with the Trump regime in office, looks like a very good place to build mines. Trump wants to see this type of thing, and they're trying to roll back regulations and so forth to make it possible. So it doesn't take a lifetime to build a mine. So there's a lot of things to look at.
Can
When,
we segue on that last point that you were just making there?
yeah,
So there was some news today that the U.S. is in talks to set up a $5 billion fund to invest in mining. They've already taken up some direct positions in some mining companies. They're, like you said, they're deregulating, making mining easier. Months ago, they were talking about taking over or incorporating Greenland and Canada into the US umbrella,
yeah.
presumably for their mineral wealth. Now they're moving on to Venezuela. They say for drugs, but they also possess a lot of mineral and energy wealth. All of that makes sense as there's been a massive underinvestment in mining for the last 15 years. There's a historical demand coming because of the electrification of everything, the monetary crisis, AI and robotics boom, military and defense. And really, there's hundreds of millions of people in the Asian circle that are about to get raised up from to the consumer class. And all of them are going to be using up a ton of minerals. So all of this, and then you have China and the US bifurcating into two different groups. China has been trying to corner critical minerals for years, and the US is just starting to figure this out. The question is the US under the Trump administration trying to unleash a new golden era for mining like we haven't seen in decades? And do you think they'll be successful?
Well, in the short term, speaking as a speculator who wants to see his stocks go up, I think it's always wonderful when they deregulate. I mean, most of these agencies should be abolished. Forget about just cut back and deregulate. They should be abolished. Uh, but Trump has already uh, bought, what's the number? About 15% of MP Minerals, which is the old Mountain Pass mine for basically that was the American mine for so-called rare earths. Okay. So the government's already taken an interest in that. And the government's taking an interest in a lot of commercial companies like a golden share in US Steel and 15% of intel, and this is classic. This is classic mercantilism. It's Mussolini-style fascism, merging the state with business in a handshake, and it's catastrophic and disastrous for the long term. The fact that the government is picking favorites by making investments with taxpayers' money in places that bureaucrats are picking. I mean, it's philosophically and economically anathema and stupid. So, but in the short run, it'll drive these stocks up, and that's fine. But like Louis XV said, après moi le déluge. That's when he was talking about the French Revolution coming, because it's just stupid and catastrophic what Trump is doing for the long run with these fascist style economic policies. I hate to use the word fascism because that word is never defined properly and it's ill used by mainly idiots today, but it's an economic system more than anything else.
Okay, so I hear you loud and clear. Would you add up all these things though and say it's clear that this administration has a very strong focus on mining, more so than maybe many of the
Yeah.
previous?
No, they're pro-mining,
Yeah,
not
pro mining.
not anti-mining. So this is very, very good.
Yeah, bullish, right?
Yeah, yeah, it is for deregulating and making things easier for the short run, or the long run. That's excellent.
Yeah.
Putting money into the business, great for the short run, disastrous for the long run. And wanting to put together a sovereign wealth fund, well, the only way they can do that is by borrowing more money to speculate in stocks.
Well, at least they won't have to report their earnings anymore to the public to let us know how they're doing. So if they're failing, we won't know.
The public doesn't know and doesn't care.
Right.
But we're headed for a very bad depression. I call it the Greater Depression. A depression's a period of time during which most people's standard of living drops significantly. And we're already well into that. It just hasn't reached the climax stage yet when most people will really notice it. Uh,
Yeah, it's a shame.
but it's going to happen, regardless of what. And listen, don't I don't know who's going to win the midterm elections in what is that? Well,
Next November.
yeah, right. Uh, I don't know who's going to win those elections, and even things like the assassination of Charlie Kirk is going to have an influence on that. So many things have an influence on it. And will the will the Republicans be reelected in 2028? Uh, that is impossible to predict. Depends on whether we have World War III, quite frankly. I
Yeah.
know that's a real possibility.
Yeah. Yeah, there's a lot that can happen between now and then. Well, this has been an incredible discussion. I want to welcome everyone who's tuning into this fantastic interview with Doug Casey, founder and chairman of Casey Research. Before we wrap up with our final,
Although I've got to mention, Gary, I sold Casey Research to
oh,
my
you
friend
did.
Porter Stansberry, and it's a happy thing for everybody concerned. So now I just do my blog at the International Man and my podcast with Matt Smith at Doug Casey's Take on
Well,
YouTube.
thank you for
Late
educating us.
breaking news.
Yeah, breaking news. Thank you for educating us and congratulations. But so before we wrap up here with the final set of questions for Doug, I want to direct everyone interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. Join our quickly growing community and receive a free report. It's titled If You Don't Own Gold, You Know Neither History Nor Economics. That's a famous quote by investing legend Ray Dalio. That's also the name of the report. Now, I'm positive you've been enjoying the conversation that we've been having. Please let Doug know. Hit the like and subscribe button and leave a comment below the video. So, Doug, before we hit record, we were talking about doing an asset ranking lightning round. I'm just going to ask you to rank a few assets as a buy or a sell. Give it a score of 1 to 100, 100 being an extreme buy, 1 being an extreme sell. give one, maybe two sentences as to why you take the position. Let's roll through these as quickly as we can in the interest of time. Okay. On a scale of 1 to 100, is gold a buy or a sell, and why?
Mhm. It's a 75, and it's a buy for prudence, safety, and insurance. Not so much for capital gains like it used to be.
Okay. Gold miners, 1 to 100, and why?
Uh, I'd give it uh, I'd give it close to a 1 at this point. Very underpriced.
Oh,
Uh,
you mean 100?
100 is good.
Yes.
I got it backward. I'll give it 100 then. I'm
Okay.
sorry. I got confused.
That's okay.
I'd give it, I was thinking number 1 on the list as opposed to 1 on the scale out of 100. Uh, I'd give it about 100. It's the best place, practically the only place to be in the market today for all the reasons that we've talked about. Yep. Gotta
Okay.
go with gold miners.
Physical silver, 1 to 100, and why?
Uh, about 90. Uh, it's not at $6 anymore. At $42, it's run up a lot. But there's lots of good reasons that we haven't talked about why it's going to go a lot higher, why it's kind of a leveraged play on the same things that take gold up. So, yeah, give it a good 90. Everybody ought to own a lot of physical silver in their own possession.
All right. Silver miners, 1 to 100, and why?
Same story as gold. I mean, they're a different story than gold in other ways, but very volatile, much smaller. Yeah, give them about 95 to 100.
Okay. Copper.
Different. It's an industrial metal, and we all know the mania that's on with building AI plants, and we need electrification to make them work, and blah blah blah. All true, but there's possibilities that developments in nanotech will greatly reduce the demand for copper uh, in the years to come with carbon transmission devices. And there's an old saying in the market, every bull market has a copper roof. And maybe we're getting there. So I like copper for reasons, but I don't like it for other reasons. I'll give it a 60.
Okay. Uranium, physical uranium.
Uh, I'll give it a 90 to 100 because nuclear is certainly the safest, the cheapest, and the cleanest form of mass power generation. That deserves a whole conversation. But that's my bottom line, and the uranium stocks are pretty cheap and they're very volatile too. So I own a bunch of them.
What would you give the uranium miners?
Oh, I'd give them a 90,
Okay.
95 to 100. They're, yeah, a place to be. Absolutely.
Okay. Oil.
Oil's about where it's it depends on so many how you assess these things, but it's about the marginal cost of production. In other words, if oil goes much below $60, oil companies can't make any money, and they're sure not going to go looking for more oil. And for political reasons alone, like the war with Iran and the Hormuz Straits, which is not nearly over. That's not over at all. Uh, it could be exploded. Lots of reasons. Another complex, total discussion we can have on the fundamentals of oil. But the answer to the question is oil stocks are hated, they're unowned. Natural gas and oil stocks have high yields today. Yeah, I'd give them a 90. Buy oil and oil stocks.
Okay. The NASDAQ.
Oh, I'd give it around a 20, something like that. Overpriced, overloaded in tech stocks. Uh, every retail investor owns stocks because they've gone up a lot and he thinks they're going to keep going up. And they might, but I have about zero interest in it.
Do you feel the same about the S&P?
Same thing, same thing.
All right. Short-term treasuries.
Short-term treasuries. Well, okay, so you're getting a few percent on your dollar, and the US government will always give you more dollars. They're unlikely to default in the near term. So I guess it's better to lose 5% per year in real terms than what you are with treasuries than it is to take a chance on losing 50% by buying the S&P or the NASDAQ if things go wrong. So
So what do you give it?
uh, give them about a 40 or a 50. I mean,
What about long-term treasuries?
oh, I'd give them about a 0 because they're eventually, they've got everything going against them. They got the currency risk, they got the inflation risk, they got the interest rate risk, everything. They're hot.
Okay.
They're hot, but they're likely hot potatoes.
Okay. On a scale of 1 to 10, each representing a percentage, where do you see inflation ending the year or first quarter of next year?
Hmm. Well, it's a question of what actual inflation is as opposed to what reported inflation is. Then we got to define inflation properly. Inflation is correctly defined as the increase in the money supply, but they don't report that really. They report retail prices, which are about as trustworthy as the reporting on retail prices from Argentina under the Kirchners. So your cost of living is going up uncomfortably, and it's going to get worse in the years to come.
So what number would you put on it for inflation?
As far as a percentage of reported or real or what? It
Yeah,
was,
we'll go with reported.
oh God, this is political guesswork, depending on the psychology of the morons that are running the government. So, and if we have a catastrophic deflation, it can go negative.
Yeah.
Prices can go down. I don't know.
Okay.
That's
Uh,
guesswork.
well, this is a good question. In 1 to 10 probability, 10 being the highest, we're headed into a recession by the end of the first quarter of 26.
10.
10.
Yeah, maybe 11.
So then likely that we will have a deflationary, it just depends on how severe, right?
I look, we're heading towards a lower standard of living. If the standard of living stays the same, I mean, maybe if Trump keeps deregulating, maybe that'll overcome a lot of the stupid things that he's doing. But the general standard, people are living out of capital, okay?
Yeah.
They're living on debt of all types, and that's going to have consequences.
Yeah.
So the standard of living, if you can keep the debt ball rolling, yeah, it'll stay up there apparently for
Yeah.
a while.
And he probably can a little bit longer when he makes it a little bit easier to refinance all that equity that's in everybody's homes. And so that'll probably be the last stand for those who are debt hungry, right?
Well, assuming that even after he controls the Federal Reserve and they artificially drop interest rates, Federal Reserve should be abolished to start with. That's a whole other question.
Yeah.
But are people going to want to put money into the long-term market, which is where mortgages come from, where your money's tied up theoretically for 30 years? I don't think so.
Yeah, I don't know
So,
either. Okay, so finally, the recommended portfolio allocation used to be 60-40, 60% stocks, 40% bonds, but nobody's recommending or has been recommending gold and gold, precious metals related stocks in either of those buckets. What do you recommend as a allocation percentage that the average person should have in terms of precious metals and equities related to precious metals, and which buckets should they pull from, the 60 or the 40?
yeah, well, you talk to your conventional advisor at Wells Fargo or wherever it is you go, uh, gold won't even be part of his equation. I think and it's so hard to speak to anybody. Conditions and psychologies vary so much, but I think you gotta have at least 20% minimum in gold and gold related things. But most people's wealth is in their houses, frankly. I mean, that's basically what most people are. Uh, People that are doing better have businesses and so forth. But look, you ought to buy a lot of gold coins and start getting interested in gold stocks. That's what I'll say. And a lot more than any conventional guy is going to tell you.
Yeah. All right. So, Doug, would you please share a key takeaway that you want the viewers to keep in mind about today's economic, market, monetary situation, precious metals, whatever? Then let everybody know where they could learn more about your work, how they can connect with you, and about your book.
Well, I want to mention the book. I happen to have a copy with me. All others do. It's called The Preparation. And I think it's the answer to a lot of the questions you just asked, Gary. This book talks about buying the most expensive thing other than a house that anybody buys in their life, which is a college education. And when I graduated from college, I even back then thought it was a misallocation of my time and my parents' money. And it wasn't that much in those days. But since then, I've come to the conclusion that going to college is like jumping into a cesspool, and it is disastrous from both a psychological and an intellectual and a moral point of view. Colleges indoctrinate the kids there. The vast majority of college teachers now didn't used to be this way so much, but now, for lots of reasons, there are Marxists, there are wokesters, there are hardcore leftists. Kids listen to them because they know they're paying a lot of money for the privilege of going to college. And it absolutely this nonsense insinuates itself into young minds that don't know any better. So stay away from college like the plague. That's one point in the book that I'm trying to convince people of. The second point is, well, what do you do if you're not going to go to college? You're going to stay in your mom's basement? You're not qualified for anything out of high school. What are you going to go to work at McDonald's? You got to start someplace, but probably not the best thing to do. You can join the military, uh, small odds type of thing. So what are you going to do? What we lay out in this book is exactly what a young man should do during those 4 years. How to get an academic education that's far superior to what you'll get even if you go to Harvard or one of those schools academically, to learn chemistry, physics, English literature, history, these things. That's a better education, but more important, how to use those 4 years, which are the most vital 4 years in anybody's life, certainly a young man's life, to in effect become a Renaissance man so you could go and do anywhere and anything. Like, for instance, by the time you finish the 16 quarters, we have you doing something different and valuable and real every quarter. Everything from learning to become an EMT, which can pay very substantial money. Like my co-author, uh, uh, Matt Smith's son, we're using him as a guinea pig for this course. He became an EMT and got a job as an EMT in a firefighting team out west last summer. He was paid $600 a day with no expenses. So all that money went to the bottom line, to his bank. So that's one thing that you can do. Second, you might go to Florida, and we show you where you can learn to drive all kinds of heavy equipment, bulldozers, backhoes, cranes, you name it, for a month. Very, very valuable, high-paying skill. Then we send you to Florence, Italy, to learn to become a professional chef. Not because you might want to follow in the footsteps of Wolfgang Puck or Gordon Ramsay, but because it's a valuable skill that all young men should know, but none of them do. Then we might send you to Canada to learn how to be a welder and work metal for a month. Then we're going to send you to Thailand to learn to spend 3 months at a Muay Thai gym, learning to be a very competent fighter, because this is something every young man should know too. So you get my drift here, that by the time you finish this, you've picked up a lot of practical skills that none of your compadres who went to college have. None of these things. They're just kids that have sat in class and tried to pass exams. You're doing all this stuff. And also, a part of the academics is we believe that we show you how while you're doing all this other stuff, you can learn all the basics of an MBA degree so that you're qualified to be an entrepreneur, not just a cubicle dwelling employee. So all this stuff is in this book. And I really urge anybody that's got a son or even a daughter or a grandson or granddaughter or anybody, frankly, should go through this book and think about it and do it.
Where can they find it?
Amazon. Everything goes through Amazon these days. They dominate the publishing world. It's totally.
I'll put up a link in the description area, and I'll also have it visible right here. But where else can you be found? Your website and X?
Well, I think one of my guys probably puts me on X. I don't know. I don't even follow it. It's a time waster. But I'm on internationalman.com. We call it that because I've been to 155 countries and lived in 10 of them. So that's what we called it. And I do an article there every week, along with 5 other guys that are really interesting. So you should subscribe to it. It's free and it's good. International.com. And then twice a week with Max Smith, my co-author on the preparation, we do a podcast on YouTube. And we cover everything under the sun there.
Okay. I'll have all the information up on the screen. I'll also put it in the description area. So that'll be links where people can click through. Doug, thanks for coming on to Metals and Miners again, being so generous with your time, analysis, and ideas. It's always so awesome to spend the time with you. I know the audience loves it. I love it. I look forward to having you back on sometime soon. Everybody else, thank you for watching. Before we wrap up here with the final set of questions for Doug, I want to direct everyone interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. Join our quickly growing community and receive a free report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio. That's also the name of the report.